All right, everyone, welcome back for the episode of This Week in Charts via Conover Trades and Wall Street for Main Street. If you've done it already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel. Come find Jason on Patreon and come find me on ConoverTrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So markets this week with a pretty good decline, although we did finish off the lows, and you can see here this trend line that I'm pointing at right now. That goes all the way back to the 2023 low. So we had that little pullback there, and we just connected through. And we did breach that this week, and we we managed to close right, pretty much literally right on top of it, and actually just above, a fraction above the 100-day moving average there on the S&P 500. So markets got really stretched to the downside. We talked about some risk last week, particularly with the dollar yen, and I still think that is out there. I did say that over this past week, I thought that we would see a little bit more of a bounce in the dollar yen, and that's what we did see, especially the last day or two. Really, to me, though, 152 is a big area, and if this retraces here and puts in another lower high and starts to come back down, that could be another shoe to drop. But that said, right now at face value, we did have, we were quite overdone here in the short term on the S&P. We had basically 6 straight down. I mean, technically this day was green by like 3 points, but we had basically 6 straight down. The last time we had 7 was in 2020 when we had the crash there. So market very, very stretched to the downside. In fact, the last time we had 6 was right here in April, and you can see that was a major low for last year, really. So market really stretched, and we were looking for a bounce here, and we got it right at this area. You can see actually the NQ. If we look at the Nasdaq, we went right to the the 200 moving average on the daily, and we did kind of sweep this low and swept the 200 moving average as well, and we did close back above. If we look at the triple Qs, you can see we closed right back above that even 5 number, whole round number there. So again, markets here able to hold up this week. I do think we do have a pivot low in place off of this this little, everyone's calling it a growth scare. I think it's more the dollar yen. In fact, if you really want, you can take a look here. Just look intraday, and you can just compare it to the ES, and it's pretty much the same chart. I mean, it's pretty much the same chart outside of ES having that bigger dump yesterday. But outside of that, it's pretty much in lockstep, at least as far as the peaks and the valleys. It's not the same percentage moves, of course, but the peaks and the valleys are pretty close there. So for me, this is an important chart to watch, and if this continues to rally up, the market will like that, from what I can see right here. Next level of resistance right now, obviously we have the trend line there. We got the the 6,000 area on SPX. That's going to be a big level right there. So a whole round number. Dealers will be short long, based on this line here, and you can see how it coincides with the 50-day moving average as well. So this is going to be a key area to watch next week. If we look at the weekly time frame, technically no real damage. I mean, we closed below the weekly 20, but that's really it. And the monthly kind of got saved here today. So you can see there's that other trend line there. We really just kind of an inside candle. Another trend line I am watching too that got hit today, and this is one we actually day traded and made some nice money on, right here. So technically we did break this one, which is more dominant because of its size, but we did have a one right here that held pretty well. So right now, short term, I would say give the market the upside bias for now, but watch that dollar yen. If that starts to back off again, I think markets get into trouble here. We were a little oversold. They did need a bounce regardless. So, when you get to these conditions, I believe CNN fear greed was at 15 today. So, I mean, when you get into these conditions, you can bounce for any reason at any point. It doesn't take news. And you can see here at the end of the day, look at this mega squeeze that took place really in the last 2 hours of the day. So market's able to hold up here, and levels are working pretty well. It's definitely a trader's market right now. So we've just been kind of sideways for a while. Again, like I said last week, I don't really see us. I'm not super bearish, but I'm not really bullish either. I mean, we could make nominal highs, I think, but personally, I think that's about it. I think we're going to be range bound for a while. Anyway, so the Russell 2000 here, it did get saved on the weekly. So you can see this green bar right here, 213.97. That's the weekly green bar low. It did get saved. However, the monthly breakup bar, this bar made a new all-time. Let me zoom out. Sorry. There we go. This bar made a new all-time high and a new all-time closing high, and we did close below that on the monthly. So the Russell, if there was an index I had to be short, it would probably be the Russell. Although I don't know if I'd want to be short it right now, just because of the. And you'd probably get a squeeze. You're probably going to get a squeeze here next week, but in theory anyway, this is showing weakness. So just be aware of that. The diamond here held up. Again, this held up all week. Notice how this is the only index that had a green week. It's a risk off, right? It's blue chips, so that's Dow stocks for you, acting well in a down tape. And beyond this, going to kind of expand here on what I was saying a minute ago, I don't really see this as too bearish right now. I see this as like a pretty controlled correction. Part of the reason I say that is just look at the semis, right? A lot of weakness here. Nvidia held the 120 handle. We talked about that last week. But look at the weakness there. Look at the weakness in cloud. Look at XLK. And then look at other sectors. XLF closing at all-time highs. The highest monthly close ever for XLF. KRE, regional banks were green this week. They were green for the week. You had VNQ, commercial real estate. Negated that red bar high that we've been talking about over and over. Hasn't done it on the weekly, but it's close. You also have, even home builders were green on the week. Not by much, but they were green. Dow Transports were green today. Not green on the week, but they were green today. And they were green all day long, too. So I'm saying this because a lot of this selling, it's a tech wreck, right? It's very isolated to technology, and anything that's really, small caps are a little bit, but anything that's growth related, really. It's not so much certain areas. Like other areas are doing fairly well. So anyway, enough of that sermon here. But yeah, let's cover the semis. Good sell this week. Outside move. Nvidia earnings, not a good reaction. So let's take a look. I do not like Nvidia here, to be completely honest. Here's your last two earnings reports. Actually, here's all of them. But selling. Every one of them lately, going back to May of last year, this one was the last positive one. And look at the selling, lower highs here. So be careful with these high flyers. I don't like chips. I haven't liked them for a long time. And so far, that's been the right call. Look at SMH. It's been sideways for almost a year. Hasn't really gone anywhere. IGV did get a nice bounce this week. It's still well off the high. Still has a lower high. Messy chart now. So this may need some more digestion. If you look at the weekly, you look at the monthly, you got an inside bar, which is nice, but it might take some time to get going. We talked about the transports, slightly lower on the week. Won't make too much out of it right now. Interest rates, so they definitely came down. And I guess, there is that talk about a growth scare. I guess it's certainly possible. The administration wants to push these yields down. That's what they're doing. And I think they're willing to sacrifice stocks a little bit to do that. Now, yeah, are yields down good for stocks? Yeah, to a degree, yeah. As long as it's not, right, yields can go up and down for various reasons, right? But if it's going down because of growth, then it's not very good. And I think the administration right now is willing to get yields down and willing to sacrifice stocks in the near term to get yields down. That will not last forever, but right now it's working. So that's what's going on right here. And I talked about the 30-year going to 4.25. I think that's possible. I definitely think the 10-year can get there. I think it already did today. So that already got to my target essentially. And we talked about TLT. That's going to 93. It's right there. It's almost there now. So this administration wants those yields down, and they want to give the Fed room. Essentially, is what that means. XHB, again, flat week. VNQ was strong. We talked about that. We talked about banks. Broker dealers held up okay to this week, basically flat. Onto oil here. This held up all right. I actually like oil here. I did initiate a small position finally. I haven't touched oil in a long time, but I did play with it a little bit here. And I just like what the weekly's doing. I like this pivot. I like the candle. I like how there's a big base right here of buyers that have just been at this area for a long time. And we've sold off kind of straight into that without any bounces on the weekly. So I think it's going to get a counter trend bid here. I'm not hyper bullish, but I do think it's a tradable level. You also had XLE having a decent day today and again a flat week. So again, it's not all sectors that were getting punished this week. It's not broad-based complete de-risking. XOP down, but it did have a very nice comeback today. So did OIH. Uranium stocks, CCJ, again, not very good. Again, it managed to scratch out a small gain on the week, but still kind of a weak bounce. I do like URNM here, though. I do think this is a good level. Yeah, this was your prior. You had a big consolidation pattern, started to turn into a bear flag, and then the bear flag failed right at this spot here. This is where institutions broke it out. This is where it should bounce. And it did get the bounce today. So it went to our 34 handle, which we've been talking about. URNM essentially doing the same thing, but it doesn't have the same price history as URNJ doing the same thing as URNM. And Nukes here, right at the 42 handle, getting a bid where we thought. Nat Gas had a down week this week. We'll see how this reacts at about 370. And it still has room for higher lows, though. Plenty of room. So that's still trending up, but it was down this week. Dollar index was up. Obviously, we're watching this falling wedge here. If this breaks bull, you'll see the dollar go higher. The dollar's been responding positively to tariff talk, too. And Trump has had a lot of that lately. I'm sure y'all have heard about the Zelensky meeting. Not that that was tariff talk, but lots of geopolitical stuff going on. Gold here backed off this week finally. It did make a new all-time high on Monday, though. I believe, yeah, just by a few pennies. I think this is going to consolidate and base here for the next 3 to 4 weeks. And then I think we see another leg up into the spring. So just sit tight with gold, be patient with it. It's not going to go up every single day. Same thing with silver. Should be seeing about the same sort of thing. This should get to 38 when it's said and done. I don't like platinum and palladium as much now. I just don't really love it. And it was a good decision to get out of it last Friday, obviously, because they pretty much got dumped all week. But we'll see how they shape up. I don't really see the seasonality there for them as much as gold, silver. We'll see. Copper backed off this week as well. New contract flip too. It's holding up okay. Good pullback pattern. We want to see a higher low here at some point, though. But big W pattern there. Could even be putting in kind of maybe it's putting in a little falling wedge too. Let's see. Kind of did that before, didn't it? Yeah. So there you go. See if I can break bull. On to Bitcoin. This got sliced really hard this week. But it did hold the 200, and it had a nice tail candle there. Got all the way down to almost 70. Yeah, I got 78,000. At almost to 75. I think too many people were waiting at 75 to buy it. That's probably why it didn't get there. But nice reversal there off that. This should be at least a local low. And we'll just have to see how it retests 92, 91 to 92. So I'm expecting that. And yeah, if that rejects, then it's in a little bit of trouble. But, if it can work its way back in there, then you just have, more weekly consolidation. So we did damage this chart. I mean, this is a nice tight pattern, and this has done a little bit of damage here. Now we'll see how it bounces tomorrow because this weekly candle doesn't close until Sunday. And if this if this keeps bouncing, it could look something like this right here, right? Or even it could even look like this. If we pump back up next week. So don't write it off completely yet, but it definitely it definitely got weak this week. Ethereum swept the low pretty nicely. So we made it a lower low, and then we no follow through for bear. So I think this probably can retrace to 26, maybe 20, 27 or 28 in the near term. I'm not really bullish on the coins right now, though, until they give me a reason to otherwise. But I think right now, short term for Bitcoin at least, I think it can retest 92 at least. So bottom line, markets were wicked oversold here going into today and in the middle of the day, and we had a nice sweep of the low. That said, we should be looking for some sort of counter trend rally next week. I just say and watch that. If the dollar yen here, if this is another shoe to drop, there's also another thing too coming up that nobody's really talking about. It's not next week, but the week after, the government is going to shut down. And historically, the market does not like that. It almost always presents a very good buying opportunity, but before that, it can get pretty ugly. So just a few things to consider here. We are in that Ides of March period. I told you guys on last Friday, dealers aren't going to come save this market because we have a fresh OPEX cycle to work with, and that's been the case so far this week. We got battered pretty hard the first 4 days. But, we held some key levels by Friday. We got a classic 230 squeeze. Bear's just a little overzealous going into the weekend. And, the rubber band was really stretched. Just look at, like this hourly chart here. RSI pretty beaten down, higher low there. So, it was telling us that we were getting ready for a pop at some point. Good volume today too, by the way. And we'll see. Bull's getting a little bit of a bid here. But it's going to be a back and forth market. So just be aware of that. If you're swing trading, it's going to be difficult. You got to be in and out. And, it's a day trader's paradise. But for position trading longer term, it's going to be frustrating. So collect those dividends while you can. So anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on CarnivalTrades.com. I'll see you guys all next week.